Let's move on to John Malone.
Okay.
The man, of course, in part, one of the key architects of this deal that we talked so much about a week ago and we watched last week as it reverberated through the media industry. Of course, we're talking about AT&T's decision to spin off its Warner Media unit into a new company, 71% of which will be owned by AT&T shareholders, merging it with Discovery. Malone, of course, had been one of the significant control shareholders of Discovery, but he chose to give up that control. And, I asked him why he chose to do that and what about this deal appealed to him. Take a listen.
We had speculated on whether or not a transaction with Time Warner was going to be feasible. I had that discussion, over the last couple of years, really, with investment bankers. I had that same discussion with your boss, Brian Roberts. So it was interesting when John Stankey approached David and said, I think we should have a serious discussion. David called me up and said, what do you think? I said, well, what's he got in mind? And it was, effectively a spin merge. And he said, but John thinks this is going to be a big public company. He thinks it would be inappropriate if there were any governance provisions other than plain vanilla. And my reaction was fine. That I thought that the alphabet soup that we have and, had served its purpose, had protected the company and given it a long view for a number of years. And it was time when its usefulness was coming to an end. So I was fine with that.
What encourages you about it? What is it that you feel it is going to be able to deliver that gives you a sense that this is the way that you should go?
Primarily, I think we've got a great management team. I think David Zaslav is an exceptionally talented executive, particularly in the software content space. Number two, you may remember, maybe it was up to 2 years ago, you asked me the question about HBO Max, and I said I thought they were going to struggle with getting the kind of subscriber growth in the U.S. that they were hoping for. And I think, in fact, that's true. For me, the problem with HBO Max is it had no ability to go international at the time. And the combination with Discovery, given Discovery's existing presence, large presence, in 200 countries around the world with a great brand, to me, that's the big upside.
Interesting to hear from Malone, of course, which we will continue to, guys, throughout the morning. Discovery shares did not do well last week. AT&T shares, of course, Jim, we talked so often about during the course of last week, in part because of your criticism and the cutting of the dividend that will take place once this deal closes. Investors I've spoken to in terms of Discovery, listen, it's going to be 5 times levered at the outset of the deal. It's going to have an enormous amount of debt on its balance sheet. It's still largely in a business, and by getting larger in it, which is obviously owning cable networks, that is in decline. And so there's concern about that, as is at least some questioning of that $3 billion cost synergy number that the company has committed to realizing, and realizing in fairly short order. So that's sort of some of the skepticism here. You can see Malone doesn't share that skepticism. And we did talk in more detail about the $3 billion cost synergy number and his confidence in it. We talked about the leverage the company will have and a lot of other things. Although Moffett-Nathanson this morning says, listen, they think the opportunity for Discovery Plus and HBO Max to really scale outside the U.S. is significant, just the way you heard Malone saying just now. However, they question whether more choice for the consumer by operating 2 services will be incremental. They say the key will be expanding one of the services, and their bet is Discovery Plus, to include Turner sports rights and other originals with CNN to broaden its reach as they downgrade Discovery.
Well, you can't agree with both men, because if you recall, your excellent interview last time with Malone was after Discover. Remember, they're going all the way down because of the Scripps deal.
Yes.
And he said buy it.
Yes,
and
that was 2 interviews ago, I think.
It was brilliant. And it was in the low 20s. It was
a great
And it was one of the greatest calls, but it had fallen. It had fallen. Moffett-Nathanson is predicting a similar trajectory, added to the fact that many of the people who are getting this wanted the yield, and they'll sell. So It was an excellent piece about what's going to happen shorter term. Malone is what's going to happen longer term. There'll be a time to buy this.
Shepard Smith here. Thanks for watching CNBC on YouTube.